All right, guys. What is going on? What is good? What is good? Welcome to the live stream. Welcome to Market Maker Monday. Did you guys have a good weekend? Did you guys have a good weekend? What did y'all do? If you watched any sports whatsoever, if you watched any sports whatsoever and you did not read anything this weekend, I want you to cancel your membership and never watch my stuff again. That's how I feel. That's how I feel, chat. I'm not for you. You're for the mob. Go find a mob mentor. Okay, that's how I feel. Good morning, everybody. What's good? Felix, Scott, Slowly, Marshall, Eberneth, Willow, Convicted Capitalist, Roberto, 2020, Torty, Civic, Johnny. Wife went to turn the game on. I said, turn that shit off. All right, gold star for Willow. Let's go. Let's go. Did John get a haircut? Yes, I did. Actually. Yes, I did. But I still wear hats on stream, though. I just feel like that's a staple. I've always done it. Hung out with the fam, did stuff outdoors, and we had amazing weather. All right, I'll allow it. I'll allow it, but it is 75 right now, which is really, really good top-down weather. So we are probably not going to be here for an hour because I want to hit up the... I don't know. I'll just drive around until I feel like stopping somewhere, to be honest with you. Maybe a coffee shop or something. Beard looks clean. Thanks. I had her trim the beard too. So I've been going to the same lady for like, I don't know, like 4 years now. It's been crazy. Her husband's a veteran too. So gotta watch that camera glare. Damn it. Everybody wants to get banned today. Is that what you guys want? Y'all just want to come on here, mess around. Y'all don't want to learn anything today. Y'all made enough money today. Nah, John, we're good. We made money. We longed this morning. We don't need to learn anything. We're good. We're just here for the shits and giggles, huh? Big James is here. Hopefully Big James isn't on some shenanigans. We need a separate chat for the... We need a separate chat. All right. We need to bring we need to bring some segregation into the into that Discord. We need like the hooligans in one shot and everybody else can stay in the general chat. Yeah, we definitely need a hooligans chat. You guys are something else. Done trading within the first 2 hours of open. Be chilling. Yeah, so that's what I wanted to go over a little bit. Look, man, with NQ's been a little bit more volatile, right? It's the tech sector, no big deal. We talked about this last week. I'm not going to go through all of the stocks, obviously, but it's been crazy with some of the Nasdaq stocks, some of the tech stocks, right? Especially AMD. We had that massive drop lower last week. We had, I can't remember who else it was that was on the list. Microsoft, they got spanked. Okay. They got spanked the last couple weeks as well. I think Google's actually been doing okay. I think it was Amazon that got their face ripped off. Right? So not only does 2-day Prime delivery take 3 days to deliver, yeah, short, right? Their stock has been getting killed as well. So I don't know, man. I don't know what Jeff Bezos is doing over there. I don't know what's going on. But they're not doing good. And I hate waiting 3 days when I'm paying for 2-day delivery. But I guess that's a separate issue. I guess that is a separate issue. But anyways, the point is we saw some extended range, right? If you remember back in like January, right? January had a lot of very small ranges. Okay. There wasn't a lot going on. We finally got, some gap on the 20th, right? We got that expansion, which was cool. The ranges got a little bit bigger, and then it was last week, and especially like a little bit of today, but mostly last week, that had really, really much larger ranges. So I'm not going to say that it's been the easiest. It definitely hasn't been the hardest condition to trade. But I'm pretty sure I told you on Thursday's market review that I wouldn't be surprised if we took November's low. We did not. Okay, that's cool. And so now we're back in the range again, right? We're just back. We're still, you guys do realize that we're still in this same range from October to November, right? Like we are still within that range in February. Wild stuff here. So we don't take that low. Friday closes back within the range. Not a surprise. You guys already know. Here's another supply and demand concept for you. Okay. When Tuesday, Wednesday, and Thursday trades lower, Friday is not always, but typically a reversal day. Friday is typically an up day. If Tuesday, Wednesday, and Thursday are consecutively lower, the inverse is the same. If we trade, this isn't a Monday, Tuesday, Wednesday, but just as an example, if this was a Tuesday higher, Wednesday higher, Thursday higher, Friday can typically trade back into the range. Okay. So we do have that. And today so far, we opened, traded lower, and now we are higher back into the range. So what do I expect? I don't really have high expectations. If I had to pick a side, Blake, I would go with higher. I would go with higher. Because if we look at ES eventually did come down for the January 21st low and extended for the December 18th low. And I want to say it also ran into that. Right? Which is cool. So down candle there, some lows here, and that was essentially the low of Friday. So what are we headed for now? Well, obviously it looks like we want to trade higher and then possibly up to that too. So if ES wants to trade higher, Dow is pretty much already higher. NQ is the one that's lagging behind, if you will. Does that mean ES was under manipulation while NQ was under accumulation? No. They were both under manipulation, and neither one of them took that long-term low. The difference, okay, outside of what they actually measure, like the ETFs, for example, like what the actual index has in it, those are obviously different. Outside of that, when it comes to the price action, they did the same thing, except NQ had a much further move lower than ES did, right? ES still traded lower, still took these lows, but not that one. Same thing. NQ took those lows, but not that one. It's just, it looked like it was about to. That's why I said I wouldn't be surprised if it did it. It did not. So I wouldn't say that that ES was under manipulation and that NQ was under accumulation. I wouldn't say that. Now, if we look at this morning, though, that's a different story. That is a different story. So we're gonna take that off of there, and we are going to add a couple things here so we can excuse me, so we can study some price action, so you don't I don't know, fall for the stupid shit that's out there, for some of the stupid shit that's out there. Okay, so NQH 2026 5-minute chart. Equities is going to be very important. It's always, equities open is always important every day. Every day. When I saw this morning's divergence, that's what gave me the confidence to take longs. Oh, exactly, Willow. Exactly. And when you start putting a little bit more pieces to the puzzle, i.e., what's on my chart, it gives you a better understanding of turning points in the marketplace. Order flow, right? Does order flow support your trade or your idea? Okay, still no indicators. I ought to make that a series. Still no indicators, episode 1 today, right? That would be such a great title, because I have the greatest titles. I don't care what anybody says. I don't care what any of you say. I have the best stream titles out of anybody, and I definitely pride myself on that. But anyway, let's continue. So we have London's low, right? We have London's low, and then a rally back into Sunday's gap. So equities open is right there. Okay. So what do you notice? Well, it's obvious that we did what? We opened and traded lower, right? Wicked it, and we wicked below London's low, right? Whenever we're about to trade, not trade, but whenever time, the aspect of time, right? We're fixing to come up on a session open. All right. One of the things that we look for is the previous session high and low. We're probably not going to get to the previous day high and low without first getting to the previous session high and low. Right? So if we're getting ready to head into equities, what do we have? We have London's low, and then London's high is probably up here, right? Like up here somewhere. When this traded lower and away from it, that's cool. Okay. Now, at the same time, though, what has its peer done? There's, you know what? I'm going to just keep it my regular. Did it do the same thing? I'll go back to that in a minute, Roberto. But there's your 8:30 Central Time. That's equities for me. Okay. Right. There's your equities open, and it does trade lower, but it doesn't take the same low. So coming back to your question, what's under manipulation? What's under accumulation? Based on that, right? NQ, if NQ is the one that took the low, that is the one under manipulation. Hell, it's all manipulated, but you know, for sake of precision, I guess, you know, when it comes to concepts and labeling things, by definition, that is a liquidity sweep. It is sweeping, not just that low, but this one here too, right? Because inside of this range, there's going to be liquidity at that low as well. So it takes that one and that one, extends a little bit beyond it, 8 points or so, quick math, back into the range. So if NQ is the one under manipulation, what does that make this one? If it does not trade lower, that means ES is under accumulation. Technically they're both under accumulation because they're both going to go higher. But which one is stronger in that sense? Based on that, it's going to be ES. It's going to be ES. Now, one of the differences as well, if we'll put that on here as well. If you see equities open and it traded lower and back off of it, right? What's that right there? What's that right there? At nice 6954. No, but Mason, don't do it. I know somebody wants to say it. Don't say it. Okay. It's a new year, folks. But right here, low resistant highs. Low resistant highs. That is a target. So if we have accumulation and we have a target, we have some further targets as well. But the very first one, the very closest one, is right there. Okay. 835 trades back to, okay, trades back to the open. What else does it trade into? Oh, the last down candle. There's 1,000 names for whatever that is. Whatever you want to call it. Doesn't matter to me. But trades right into that. Okay, next candle. Bang, right there. See that? Easy scalps in there for like 20 points roughly. It's $1,000 a contract in like less than 10 minutes. It's not a bad day. Right? It's not a bad day. But anyway, that's the point. Whichever one does not trade lower, that's the accumulation. Professional accumulation, technically. Okay? And NQ is the one under manipulation. Now, if we look a little bit closer, because we've only spent time on a 5-minute chart. We have only spent time on a 5-minute chart. We really haven't gone down into the details of the 1-minute time frame. The time frame that Twitter says to stay off of. Okay. If they tell you to stay off of a time frame, that's the biggest tell that they do not have precision. They don't have precision. If you can't trade one time frame, you can't trade all time frames. You notice anything? Do you notice anything? Last imbalance here. We trade to the upper end right there. And then right here, we trade outside the scope of it. So we trade right back into it. Right into that. 835 technically closes outside of it. Then we trade at 836 back into it, right? Okay, watch this. Watch this. More supply and demand concepts for you. What are the bodies respecting there? What are the bodies respecting right there? That's an awful color. That looks terrible. There we go. Look at that. Look at that. Every concept can become inverted. Every concept has a premium and discount. The 1 minute here definitely sucks as far as the up candles here. The 2 minute definitely smooths it out there. So when in doubt, just zoom out from the 1 minute and go out to the 2 minute. Smooths it a little bit. Look at that. That move lower here, right? And then these up candles gets traded through at 836, 838, 2 minute candle trades right down and into that. See that? And then this is where stuff really gets interesting, because what's going on here? What's going on here? Let's investigate this for a minute. Friday's live stream. I'm trying to remember. Friday's live stream was a member only live stream. If you missed it, you're missing out. But we did talk about gaps a little bit. And maybe in the market review as well, now that I think of it. But what do you know about gaps? Right? We talked about this many, many times throughout the years. Gaps have neither buy side nor sell side delivery. And gaps, for lack of a better term, gaps can act as support and resistance in the traditional sense of like supply and demand, support or resistance, whatever label you want. But that stuff has nothing to do with it. It's price delivery. Price is going to seek liquidity and inefficiencies. A gap is an inefficiency. It's classified as an inefficiency because it lacks both sides of price delivery. Right? So we trade into it and then off of it. And a lot of people think, right, they're trading like Sunday night or whatever, Monday in London or something. And a lot of people think, oh, we gapped higher. We're gonna fill the gap and then run. That's what a lot of people think. And I used to think that stuff too, because we all got indoctrinated into the shenanigans of retail trading. Right? So you see that, sure, it doesn't really fill the gap, but it trades into the gap and then away from it, right? So everybody thinks, oh, that's going to be the low, and then they get pooped on. So then it trades back into the gap, right? Oh, okay, well, that gap was support, now it's going to be resistance. Well, maybe, to an extent, sure. So yeah, it does trade lower and away from that. So like that might work for shorts, I guess. But once we got the proof of manipulation, right? We got the proof. What manipulates typically mitigates. Still no indicators. I know. Shit's ridiculous, right? We trade outside of it now. Okay, pause. Pause right here. Pause right here. What has happened so far? We're not going to cut this in half, but you can see that it went to the discount end of it and traded off of it, then traded through it. We traded to the premium end of it and away from it. But remember, this is manipulation. This was a mitigation, and we are not bearish anymore. It has traded beyond that. So if we see signatures of accumulation, right? If we see that it was bearish, sure, but it's not anymore, what do you think it's going to become? What do you think it's going to become? Where does it never go to? Well, it trades outside. I mean, this is a 2-minute chart, you know, give it a little bit of leeway here. But it never goes beyond that gap. And see, this is the issue that people have when it comes to like looking at gaps and stuff. Oh, well, it's already been traded through a couple times. It's done. No, it's not done. It's not. You're done. It's still going to respect certain things. Even though, like, sure, we've already traded through this gap multiple times. That doesn't mean anything. In the retail world, yeah, they're not going to look at it anymore. But yet, price still obeys those parameters of something that has already printed hours and hours and hours prior to. And you already know the rules prior to. Every concept can become inverted. So in the short term, yeah, it was bearish for something like that. Okay. ES on the higher time frame is bullish. If NQ is going to follow suit, then it is also going to trade higher. So again, manipulation, inversion, mitigation, this gap, is that bearish to you if it's trading above it and closing outside of it? Obviously not. So guess what? If it's not bearish anymore, what's it going to be? Bullish. Look at that. There's your, and this is our current day's range. See that beautiful expansion? Wow. Price trades from what to what? Liquidity to liquidity? Inefficiency to liquidity? We aren't necessarily there yet, but you could say inefficiency. There's still inefficiency up here, or maybe that liquidity up here. I don't know if we're going to do that. Probably will, but price still trades to the same stuff. The 4 ways that price moves. That's why it's a law. It's not a theory. It is a law. The 4 ways. Still doing it. You see what I'm saying? So on an hourly, that gap may not seem like much. On a daily, that might not seem like anything at all. Oh, it's just a gap. Who cares? Who cares? What do you mean who cares? What are you talking about? What are you talking about? Who cares? None of you say I'm just obviously being facetious, but it's like, what do you mean who cares when this is sensitive to price? Price is sensitive to that. Because the algorithm is coded to deliver price efficiently, or at least mostly efficiency. Price is not always efficient. Balanced price ranges aren't always 100% balanced, but to a large extent. You know what I'm saying? You guys have any questions so far? We talk about this stuff all the time. Literally all the time. If the markets are bullish, they're going to respect down candles. You see that here too. See the down candle. Let's move this a little bit. Right? Watch this. Oh, it's the last down candle before a nut move. No, it's not. No, it's not. Why would this work then? That's not the last one though. Because it's not just that. It's not just the last one. Oh, the candle that took liquidity. No. It works inside the ranges as well. That's what I meant earlier when I said order flow. Does order flow help confirm your bias? There's no fucking indicators on my chart. I'm not talking about any of that order flow bullshit. No. We're talking about price here. Does price tell you that you're on side? That's what I meant by that. That's why I have to explain it this way. To show you, hey, look, all this stuff still works. Hey, look, the way that we look at gaps, still doing certain things. You know what I mean? It's just, it's kind of like reading a book the first time. You read a book one time and you're going to learn a few things. Probably learn a lot if you pay attention. But you will learn more the second and the third time around. And why is that? It's just how our brains operate. Most of us need repetition. We need practice. We need to do stuff or see stuff over and over and over again. I can show you what a mitigation is. You know, not that this is one, but just as an example, like, oh, low, high, lower, low. We trade through it, back into it. And if there's an imbalance in there, that's probably going to work really well. That's the mitigation model. And you might go, okay, well, that's great. And then you're going to go try to take that and apply it to every, price swing, and you're going to get wrecked. Because it's not a cookie cutter approach. There has to be time, price, and context in alignment. Okay? And that's where the repetition comes in. So every Sunday, there's usually a gap. You know what I'm saying? Every single day that there is a trading day, there is going to be a previous session high and low and a previous day high and low. Every week, there's going to be a previous week high and low. You see what I'm saying? Data prints every minute of the day, minus the hour and the weekend for futures trading. But you guys get what I'm saying? There's always more information being printed and being printed. The problem, and this is like with social media as an example, we live in a world of information, right? There's so many books being printed today that we would never be able to read them in a lifetime. You know what I mean? Not all information is good information. Not all, smart money concepts actually serve people well. You have to filter stuff out, okay? You have to find the good information and then use the good information and throw all the other stuff away. That's one of the reasons why, again, I don't have indicators. That stuff, it just doesn't work as well as this stuff. It just doesn't. At least for me. So that is my rant for today. Okay? You have to see this stuff over and over and over again. I can tell you, all the time, every concept can become inverted. And you might, okay, well, that sounds great. It does. But you have to go into the charts. And again, like I said, I think it was like last week, I said, try to prove me wrong. Take what I give you and just try. I dare you. I triple dog dare you to prove me wrong on any of this stuff. Every concept has a premium and discount. Every concept can become inverted. Right? Trade in the direction of opposing liquidity. Wait for a low to be taken. And as soon as you get those early signatures, if you're not already in, some of those early signatures, shift in a state of delivery, last down candle, potentially, or series, or the last imbalance. Once that gets traded through, especially closed through, you got good buying opportunities. Prove me wrong. Okay? And we're seeing expansion. And it's that simple. Okay? Now, ES, you might think it's a little bit different. You wouldn't be wrong for that. I'm listening to Duffel Bag Boy. That's, I don't even know how that got on my playlist, but that's funny. Equities open. We trade lower and then through, right? But we don't really have like an inversion or anything here. But we do have down candles. See what I'm saying? We do have that. Or, okay, you have price trading up and above those highs, right? And then trading back down. But what does this overlap with here? Have a good one, Willow. Does that overlap with anything? Whoops. See that? Traded into the gap, respected 50%. Weird. That's fucking weird, right? That is so strange. Right there at 710. Interesting. Accumulation, we trade to the upper half and then right back again into this imbalance, which overlaps with the discount end, right? We'll cut this one in half just to show you, just to make sure you understand what I'm talking about here. We get to the premium end to leave those highs there. We get to the premium end here. And then we go back into the, again, lower half. Okay, right there in my blue circle. That's the bottom half. That's the discount end. If we are bullish, we want to do what? Buy low, sell high. Right? So does that constitute low? Yeah. We just had accumulation, and that's like the first retracement on a 5-minute chart after accumulation. That's one of the best buying opportunities right there. It's not the best, but it's one of the best. Right there. And again, it is considered low based on this range here. How would we know that? From that high down to that low that's been set, that's below 50%. That's a discount. So we're in the discount end of the range. We're at the discount end of a very important higher time frame concept, and it's right after professional accumulation. This stuff cannot be hidden from you. Price can never hide from you. You see what I'm saying? Price prints every few minutes. Open, high, low, close. Open, high, low, close. Open, low, high, close. Right? And that is very, very important information. We have Friday's close, Sunday's open. That's important information. Right? Just look at it. And then look at this. We trade outside of it and then right back into it, right? Look at that turning point. Okay? No pun. Okay? I know a lot of people watched the Super Bowl yesterday. I didn't, by the way. But that is a turning point in the marketplace. It is a gap, right? That we traded outside of, and now it is being utilized for a continuation. That's algorithmic. That's algorithmic. That is algorithmic. That is algorithmic. It's all algorithmic. Whether you're a part of the move or not, that's on you. And that's on your ability to recognize probabilities and to have courage to place a trade. That is 850, by the way. That is 850. Weird. Weird. Macros definitely don't exist, but yet at 850, we get a large range candle. That's weird. Why did we not get any volatility at 848 or 849, but 850 gives us volatility? That's fucking weird. That is fucking weird, isn't it? So strange. So strange. It's crazy. Price moves in very, very specific time windows, yet people keep denying it. Who was it that said that? George Orwell? They told you to reject the evidence. The party told you to reject the evidence of your eyes and ears. It was the most important and essential command. Interesting. So yeah, I wouldn't say reversal macro, but it's a continuation macro because we got our accumulation, and then this drop below its open to go again into the low end of the gap. 5-minute imbalance. And the 1 minute did extend as far as this down candle here. Why that one specifically? Don't ask me. I don't know. Okay, I don't know everything. Okay, it's the poor people who know it all. Okay, if you want all the answers, go ask poor people. They know everything. Okay, but wealthy people, they don't know it all. Okay, so why that one? I don't know. But that's as far as price went to during that macro and with those concepts. And this is where we are. So that's all that I got for you. That's all that I got for you. Okay. You have to study. We can take that off now. You have to study. You need the repetition. Have a good one, Scott. You need the repetition. You need the right information. And you need to apply it. Okay. And that's it, man. This stuff is really simple. It may not always be easy. It gets easier. But we look for certain signatures. Okay. Manipulation always sets the low. What's the only exception that I gave you? Welcome back, Luz. What's the only exception to that rule? The only exception, you're looking at it, by the way. The only exception to the low being a low based on manipulation, the only exception is accumulation, is professional accumulation. That's the divergence, because that is what you want to see. So even though the low was in London and we did not technically get that at equities open, that's still under accumulation. Okay? That is the only exception. And we look for that specifically. Everything else, nope. The low is always going to be set by some sort of manipulation. Once you wait for that, now you have low risk buys. Yeah, Johnny. I agree. Back testing and repetition is key. So with that, y'all be good, be blessed. If you did not know, this year we have a book every month, right? It's called Book of the Month. There's 11 this year because 48 Laws of Power is taken up 2 months because I want to give you enough time to actually read it. But February's Book of the Month is How Successful People Think by John Maxwell. John C. Maxwell is the GOAT of leadership. I do not care if you disagree. I don't care. He has actually like 3 more books coming out this year too. I'm getting all of them. But How Successful People Think is a really good book, even if you're not a trader. It really has pretty much nothing to do with trading. But big picture thinking, to question popular thinking, and all these other ideas. It's a really good book. It's the first book that I read in a day. It took me like 4, maybe 5 hours. I did it at a coffee shop. It was wonderful. I actually met John Maxwell in December. Got a picture with him. I posted that already. So, it's a really good one. I think you should read it. I don't care if you don't use my Amazon link. Okay, I get like probably 10 cents for that stuff anyway. I really do not get paid from that stuff. If you want to get a used copy or go to a used bookstore, please do that. Support local bookstores. So with that, y'all be good, be blessed. We're going to be here for another live stream tomorrow on the 10th. Same time, same place, same price. I'll probably be on my same bullshit tomorrow, but that's okay. As long as you guys learn something, I'm cool with that. But yeah, y'all have a good one. I'll see you tomorrow.
Only you